Good morning, everyone. Welcome everyone to the presentation of the third quarter and 9 months of year 2020. And today I would like to present you the overview of the performance of this quarter and also the market outlook that we'll present later on. Okay, let me start with the overview in the third quarter. For the war in the third quarter, for the crude oil price, you may know that the crude oil price also increased from around $41 per barrel to around $42 per barrel. The crude oil price the range around $40 to $45 per barrel in the third quarter. That also improved much from the second quarter. During the peak COVID-19 in April, that the crude oil price that time around $20 per barrel. And also for the Melbourne OSP, the Melbourne OSP also increased from around minus $5 per barrel to plus $1 per barrel. So it means the crude of the Melbourne increased around $6 per barrel. That one also pressure our crude cost that Thai oil used Melbourne around 67% in the third quarter. For the demand supply side, in the middle of the presentation, you can see that the bar chart is slightly increased from the peak COVID in April. The gasoline demand also increased from minus 6 million barrels per day to minus around 2 million barrels per day. But for the jet and all kerosene, the demand not pick up so much. It's still minus around 3 million barrels per day. The better of the gasoline in the third quarter because of the major of the city easing the lockdown. For the inventory side, or represent the supply side on the right hand side, you can see that for the gasoline, the blue graph also the drawdown from the second quarter. In the second quarter, you can see that the blue line of the graph is very far from the 5-year average range. But for the third quarter, the graph also lower down and almost touch the 5-year average range. But for the jet and gasoline, the inventory not lower down yet. So from the demand and supply side, you can see that it's also much rebalancing in the second half of the year. Then I will move you to the market highlight of Thai oil in the third quarter. For the next slide. As I mentioned before that the Dubai price, that the benchmark price increased from the second quarter, from the $61 per barrel to around $62 per barrel. The main reason is because of the global oil demand recovery from easing lockdown and also the strong compliance of the OPEC Plus. The OPEC Plus also continue to comply the lower production among the group. So the result of the crude oil price increase is mean that Thai oil will have the stock gain in the third quarter around $4 per barrel. But when we move to the market GRM in the third quarter we report minus $1.1 per barrel. That we can say that this is the historical low for the historical of Thai oil since IPO. For the market JM, that pressure from the spread of the jet and gas oil demand and gas oil spread not much improved, but just only the gasoline improved from the second quarter. And another pressure is also the crude cost that I mentioned before, that we use the Melbourne around 67%, and the OSP improved much from the second quarter. It means we use the higher crude cost in the third quarter. That also the major factor that pressure our market GM. When we include the other business like aromatic and lube base, the contribution from the aromatic and lube base in the third quarter is slightly softened from the second quarter because of the softened margin. But for the gas oil improved much from the demand from the base oil and also the bitumen. The contribution from base oil to GIM is $0.8 per barrel. When we combine the stock gain that we gain around $4 per barrel, we report the accounting GIM at $4.9 per barrel. But if we exclude the stock gain, we report market GIM at $1.0 per barrel. When we move to 9 months, the accounting GIM that include the huge stock loss in the first half, accounting GIM will report minus $1.8 per barrel. When we remove the stock loss, the market GIM will report at $2 per barrel. Then I would like to highlight more about the operation. For the operation in the third quarter, we still continue optimize the plant utilization among the group. For the third quarter, you can see that the utilization rate among the group is slightly lower than second quarter. For the LAB, mostly the LAB or Labic business is report lower much around 70% because of we have the major turnaround of the Lapics around 37 days. That include that is a schedule maintenance, and now it's also start up and can run smoothly. And for the plant that we optimize, we try to optimize the gasoline and jet. For Q3, you can see that we produce more for the gasoline because of the easing lockdown and demand the gasoline pick up in the third quarter, and lower the jet. That you can see that the jet demand not much improved. So it means this is our attempt to maximize our profit by optimize the plant operation. For the commercial side, we still try to maximize sales in the domestic. We improve the domestic sale to 89% in this quarter and minimize the export to neighbor around 1% to from 7% to 1%. And the crude that I mentioned before, we try to use the Middle East crude much. For this quarter, for the third quarter, we use 67%, and compared to last quarter, we use around 60%. For the financial side, we done the EGM of the power business restructuring. The EGM was done on the 28th of October. We get award almost 100%. From this transaction, we will gain the money from selling share of GPSC to PTT around 5.5 billion baht. That the money we will get in December of this year, or I can say that in Q4 this year. And for the next transaction is the EBT transaction or entire business transfer of Thai Oil Power business. It will complete in next year. The net cash flow of this transaction is 5.9 billion baht. And for the other attempt that we try to do more to improve on our net profit is the stringent of operating costs. For this year, we have the target to improve the bottom line by reduce the operating costs around 20 to 25% of the corporate plan, or is in amount around 2.5 billion baht. And our activity for the financial that we try to do is we do the proactive FX risk management. So for the net profit of the third quarter, we report the net profit at 750 million baht. Then we inform the stock gain is around 3 billion baht. But you can see that net operating profit for third quarter still minus around 2 billion baht because of we have the market GRM at around just only $1 per barrel. But for the cash cost is still around $3 per barrel. For 9 months, it's still the net loss around 11 billion baht because of we have huge stock loss in the first half of the year. You can see that around 9.2 billion baht is the stock loss, and the operating profit for the 9 months is around 2.6 billion baht. For the net profit contribution, the power business is still the stable income for our business. It contributes around 60% to the contribution of the net profit among the softened margin of petroleum and also petrochemical around this period. Then for the transaction that I mentioned before, the transaction of power business that we done the EBT on the 28th October, and for the next year we will do the entire business transfer of power business. It means from the next year onward, Thai Oil will own Thai Oil Power 100%, and the shareholder that we try to maintain share in GPSC more than 20%. And also the income from the power, we try to maintain at 15% in our portfolio. And the last one for me is CFP progress. The project progress up to September. The project progress is around 51%, and the budget use is 36%. The budget use is the payment from milestone. Frankly speaking, we have the impact from the COVID during the first 9 months. That you know that we use the labor from the neighbor and also the city lockdown in Italy and South Korea. That the site that we build the module and the equipment. And the completion that we expect for this year is we expect that we will complete the crude tank election by this year and also complete the pipeline working by the end of this year. For the next year onward, we expect to complete the engineering work out and focus with the construction work on site. And moreover, we try to most of the critical equipment and module will be delivered and installed at site. And now we will move you to the performance in the third quarter.
Thank you. For the Q3 and 9-month performance highlight and analysis, may I start with the refinery business unit first? In this chart, upper left chart show that Thai oil utilization rate compared with our peers. In Q3, although we overrun a bit, around 4% to 93% in Q3 in response to the COVID-19 outbreak. But it seems to be that we quite outperform than industry peer because industry peer run only 83%. And in terms of the domestic oil demand, in upper right graph shows that domestic oil demand in 9 months this year was contracted by around 12% year-on-year, led by jet fuel, which was heavily affected by the worldwide flight cancellation. But if you see the latest announcement in September, domestic oil demand will improve quite a lot, especially in more gas and gas oil. The demand was already back to normal and showed some sign of improvement. For example, more gas increased around to 11% year-on-year, and the gas oil around 4%. That's mainly because of the easing lockdown. It is supporting the transportation fee. And in terms of sale breakdown in the lower left, PTT still be our major customer. We sell to PTT up almost to 50%, and the rates we sell to other major oil retailers in the domestic market such as Shell, Chevron, Bangja, and 32% it's for the PTT mainly. And in terms of domestic sale, in the lower right graph shows that in Q3, we still sell mainly in the domestic market up to almost 90% and leaving only 11% sales to export. And out of 10% out of it, we goes to CLE country and leaving only 1% to Singapore and Hong Kong. Next, in terms of the GRM of the refinery, I would say that in Q3, we report market GRM at minus $1.1 per barrel. It's very, very weak and lowest ever that from the historical period. Mainly, it's pressured by the product spread. If you see the upper table, middle distillate crack was very weak, especially jet that I mentioned for the worldwide flight cancellation. However, in terms of gasoline product, it seems to be better Q1Q, mainly because of better demand in the US from the driving season and also easing lockdown policy that drive transportation more. However, in terms of the crude intake, as you can see that Middle East crude still be our major crude. We use up to 70% of the Middle East crude. Although the crude OSP turning to be slight premium compared with the huge loss, huge discount in Q2. So these will affect to the negative market GRM this quarter. However, in turn, we still gain some benefit from the rising crude price because of in this quarter, we have the stock gain up to $4 per barrel. So all in all, accounting GRM was $2.9 per barrel. And for the 9 months this year, accounting GRM was negative 3.7, mainly pressured by the stock loss in Q1. Next, move on to aromatics business unit. In this business unit, contribution from aromatic in Q3, the GIM contribution is around $1.2 per barrel, which is lower Q1Q from $1.6 per barrel in Q2. I would say that mainly it was pressured by the weak product spread of both paraxylene and benzene product that mainly pressured by the lower demand due to the COVID-19 outbreak and also the higher supply from the increasing refinery demand. And in terms of the aromatic production in Q3, we optimized run at 56% due to the weak aromatic product spread, and we try to increase in terms of byproduct of this unit and send back to the refinery as a gasoline blending. During the gasoline margin was very good. Next, let's move on. In this BU, you can see that the contribution from base oil business unit improved to around 80 cents per barrel, compared with the $0 per barrel in Q2. That exceptionally low margin, I would say. In Q2, the margin was pressured by the weak demand, both of base oil and bitumen, mainly from the COVID-19 outbreak. But it seems that the situation gradually resolved in Q3. The global economic activity has been increasing in this quarter, and including in the road repair and road construction that still support the bitumen demand. So in this quarter, bitumen demand was higher and the spread was quite good. So that's why in the base oil BU, we have the contribution around 80 cents per barrel. And in terms of the base oil production, we still optimize run at 89%. And next, if you combine three main business margin together, you can see that left-hand side, as I mentioned before, gross refinery margin in 9 months, it was around $0.1 per barrel. It is actually exceptionally lower when you compare with the historical period, like past 4 years, which was around $3 to $4 per barrel, that mainly because of the COVID-19 impact. However, we are not pure play refinery. We are integrated with the petrochemical and with base oil. So as you can see, lower left graph shows gross integrated margin. For the 9 months, we have $2 per barrel on top on the market GIM from aromatic and base oil. So that's why the market GIM was around $2 per barrel. However, we still impact from the huge stock loss. So in terms of accounting GIM, it's around minus $1.8 per barrel. And in terms of cash cost side, on the right-hand side, Thai Oil has been always take it seriously for the cost control. As you can see from the past, in 2016 to 2019, our operating cost of the refinery after graph shows that operating cost was only $1.4 per barrel, which is very competitive, and it is reckoned to be that in the first quartile among the refinery in Asia Pacific and Middle East. And during the COVID-19 situation, we even more stricter in terms of cost control. And as Kunterga mentioned, that we have the stringent cost reduction by setting like a 20 to 25% reduction on the cost. So if you see the current operating cost in 9 months, the operating cost was around $1.3 per barrel. It seems that in the low level, although we lower run in 9 months, but in terms of dollars per barrel, still remain low. However, in terms of group cash cost, lower left shows that especially in Q3, operating cost of the group cash cost seems higher, around 40 cents per barrel. That mainly because of the major turnaround cost of Lamix during the planned maintenance around 1 month. However, if you deduct or exclude this one time, so the operating cost remain low. Next, let's move on to the power business BU. That's always contribute the net profit to the group and seem to be the leader in this year because the main main sectors such the petrochemical and petroleum was pressured by the COVID-19. In terms of power business unit, there are two types of power plants. Firstly, it's our own power plants under the small power producers under Thai Oil Power, and top is PP company. Total combined megawatt of electricity is almost 360 megawatt. And secondly, is the equity holding in the GPSC. We have totally around 24% shareholding in GPSC. So in this quarter, in Q3, we have the net profit contribution from power around 833 million baht, which is higher Q1Q, but mainly supported by the higher GPSC contribution that was supported by their hydro power plants operation during the rainy season. So next is the performance breakdown of all business unit of Thai Oil. The three main sectors, petroleum, petrochemical, lube-based oil, and power, I already mentioned. But in terms of other business in this quarter, in Q3, it still sent the net profit to Thai Oil Group around 206 million baht, and in 9 months is around 524 million baht. That mainly come from the solvents and ethanol business. For the solvents BU, it seems that the sale volume is quite increasing because we try to expand the market into Vietnam and also Myanmar, so that's why the sale volume is increasing, including for the hygiene products as well. As same as the ethanol BU, we have the higher contribution from the ethanol sale volume, both of ethanol fuel, tracking with the better gasoline demand after the COVID-19 inflation, and also the hygiene product. So if you move on to the group consolidated P&L in this slide, shows that in terms of Q3, we have the EBITDA in better EBITDA Q1Q, that mainly because of stock gain that I already mentioned. However, in terms of in this quarter, we still gain from the hedging activity mainly because of we hedge in parasitic margin hedge, and we gain around 140 million baht. And in terms of net profit, it's lower Q1Q that because of pressure by the lower GRM, I would say. And in terms of 9 months, although the EBITDA was negative because it's still pressure from the stop loss, but also, however, in terms of net profit as well, we reported net profit as a net loss around 10.6 billion baht in this quarter. However, we have the gain on the tax because we can recognize as a deferred tax asset from the loss carry forward from the stop loss in this year. Next, in terms of cash flow statement, and operating cash flow in 9 months this year was a negative around 2.5 billion Thai baht, that mainly pressured by the contracted GIM from COVID-19 impact. And in terms of investment activities, we invest mainly in the capex, that you can see that we invest around 2 billion Thai baht, or is equivalent around $1 billion USD, that mainly spent on the CFP project. And in terms of short-term investment, we have the cash outflow from the short-term investment, that because of we invest our surplus cash into the short-term investment into enhance yield. Then we fund those spending, the capex spending by financing activity, by we issue the bond in June around $1 billion USD. And if you see the cash position is quite slightly lower from the beginning of this year, and ending position was around 70.9 billion, or is equivalent to 2.2 billion USD. Next, in terms of financial position, in this quarter, 30th September, total asset of Thai Oil is around 300 billion Thai baht, or is equivalent to 9.4 billion USD, consisting of cash and short-term investment of 2.2 billion USD. And in terms of PP&E, it's around 6 billion USD. And if you consider in terms of debt side, we have total interest-bearing debt around 4.8 billion. And if you deduct the cash and short-term investment, the net debt is only 2.5 billion USD. And most of our debt is in the USD currency. And for the interest rate, we already fixed. And in terms of financial ratios, it seems that net debt per adjusted EBITDA is exceptionally high in this year. That because of the weak EBITDA. However, we think that situation will be improved from the recovery or demand, which we will have a discussion later on by another point. And in terms of net debt per equity, it's still below than our range by 1 times. We still have around 0.7 times. And if you see in the credit ratings, all 3 credit rating agencies still affirm us in the investment grade. For example, Moody's, Baa2, Standard & Poor's, BBB+, and Fitch rating that AA-. Lastly, before I move on to another point, it's about the CapEx plan of Thai Oil. This is the CapEx plan in the next 5 years of Thai Oil, which is already approved by our board of directors. You can see that total capex plan is around 3.5 billion USD, and we already spent around 1 billion this year. So the remaining is only 2.5. And if you compare with cash and short-term investment, it's quite sufficient to fund the project. However, we still have alternative fundings, not only the asset monetization, but also the crude payment extension. So that's covered my presentation. So next would be
thank you. For the last section, let me briefly update what is happening in the market during Q4 and give you some color about 2021 industry outlook. So I'll cover the crude oil market outlook and refinery, petchem, and base oil. So for the crude oil price, during Q4 we reported the inventory gain about 3 billion baht or $4 per barrel. And for the remaining of the year, we expect oil price to stay in the range of $40 to $45 per barrel. So we don't expect a big inventory gain or loss during Q4. If we look at the demand and supply picture on the top left charts, as you may know that this year the market has been heavily pressured by the impact of the COVID-19. So we lost oil demand about 8.8 million barrels per day this year compared to 2019. And the outlook is a bit weaker compared to the last few months because we are having a second lockdown in many of the European countries due to rising COVID cases. But coming into 2021, we expect demand to recover almost 6 million barrels per day. So mainly because of the discovery of the vaccine. So we need to wait and see how we can have the big impact from the vaccine in 2021. So if you combine these 2 years, we still lost demand almost 3 million barrels per day. And main product would be the jet fuel because of the restricted international traveling at this moment. And on the supply side, on the B chart, so next year we expect that the global new supply will come to the market about 2.5 million barrels per day. So as you can see, it's still lower than the demand recovery. But this year, because we lost a lot of the demand and we had very strong commitment from the OPEC Plus member to cut supply. So at this moment, we still have a lot of spare capacity from the producers. So it's subject to how they control the market. So within the fourth quarter this year, we still see that there's been a very strong commitment from the members. So if we look at the inventory that built during the second quarter, now it has been falling since then because of the recovered product demand and control supply. So we expect the situation to continue in 2021. So the OPEC Plus member will meet again at the end of this month to consider that policy for next year. So we need to wait and see their direction. But we believe that with the control situation, so the oil price could stay around $40 to $50 per barrel next year. And let me move on to the refining market. So as you know that this year the margin has been under pressure during the past few quarters. So in Q2, Singapore margin actually went down to a negative 90 cents per barrel. But during Q3 and Q4, we are seeing improving margin because of the recovering demand. So in Q4 today, the Singapore margin is around $1.6 per barrel and improving about $1.6 per barrel Q on Q. So mainly from the improving product demand and also lower global product inventory. And during Q4, we also have some supporting factor from lower crude premium from Q3. So we think that our GRM would perform in a similar way. And if we look into 2021, we expect the global product demand will continue to recover, especially gasoline demand and diesel demand. But jet demand could still be lacking because of the travel restriction. So let me show you some figures on the demand side. So if you look at the top left chart, we lost a lot of demand during the second quarter this year. So total almost 15 million barrels per day on average in Q2. And all the products such as the gasoline, jet, and diesel lost almost the same magnitude. But during Q3, we recover quite quickly, almost 50% of the loss. And in Q4, perhaps a bit slower because of the main loss due on the jet side. But we expect that demand for gasoline and diesel should be back to the pre-COVID level within 2021, while the jet demand will take a bit 1 to 2 years to get back there. And on the product inventory on the bottom left charts, so during Q2 we built a lot of product inventory because refinery run were a bit higher than the demand. But during Q3 and Q4, demand recover quite quickly, while refinery run is still on the low side. So we are drawing global inventory right now, and we expect the product inventory to normalize within 3 to 6 months. So it is expected to reach the normal level in the second quarter next year. And if you look at the new capacity on the refinery side, so this year and next year, the net capacity addition in Asia and the Middle East will be around 600,000 barrels per day each year. And on demand recovery in Asia, this year we lost about 3 million, and next year it will recover about 3 million as well. So the Asian market will be back to the pre-COVID level by the end of 2021 on average. And in terms of the supply side, because during the past few quarters, the margin were very weak, and we heard in the market that many refineries announced to shut down their facility permanently or convert their facility to import terminals. So during 2020, we heard that almost 1.5 million barrels per day has been announced for the permanent shutdown. And for 2021, if the situation continues, then there'll be another 400,000 barrels per day of the shutdown. And the combined capacity for these 2 years is about almost 2 million barrels per day. And the high case for the shutdown could be as high as 4 million barrels per day if the situation is sustained longer. And with the recovery in the product demand and lower refinery supply, we think the situation should improve in 2021. And let me touch a bit on the Thai market because we rely on Thai market about 85 to 90% of the petroleum sales. My colleague already mentioned that the gasoline and diesel demand in September in Thailand actually showed some growth compared to 2019. So gasoline grew about 11% in September, while diesel increased 4%. So we already back to the pre-COVID level thanks to the contained cases in Thailand. And coming into 2021, we expect demand of these two products to grow about 4 to 5%. But on the other hand, on the jet fuel demand, during the Q4, we still lost about 70 to 75% of the jet fuel demand from the pre-COVID level because Thailand still relies on pretty much on international tourists. So it will take a few more years to get back there. So in 2021, we expect jet demand to grow by 33% this year, but still lost almost 60% from 2019. So for Thai Oil, we managed to cut jet production from a normal level of 22% to around 7 to 9% in the current months. So and we increased gasoline and diesel demand so in response to the market situation. And with this production, we can manage to sell all the jet production in the domestic market already. And then let me move on to the petchem sector. As you may know that the petchem is on the down cycle during these 2 years because we had a lot of capacity additions. During 2019 and 2020, the market had new capacity of 14 million tons, and mainly from China. And demand side typically grow about 2 to 3 million tons a year. And this year, we actually lost about 3 million tons from the impact of the COVID-19. But in 21 onwards, we expect demand to recover, and that recovery will help to absorb the surpluses overhang in the market, and the margin from this sector could be slightly better. The last sector is the base oil. Typically, the contribution from this sector has been very stable in the past. But this year, we take a bit a hit during the second quarter because of the impact of the COVID-19. So we had a lower demand for transportation fuel and also the lubricants. So, but coming into the third quarter, the market already recovered. So our contribution from base oil actually increased to 80 cents per barrel. So it's back to normal level already. So, and coming into 2021, we expect that the margin should be quite stable because we only have like 800,000 tons of the new capacity, while the demand will grow about 2.2 million tons. And on top of that, on the bitumen side, which is the byproduct of the base oil plants, we rely on the bitumen sales in Thailand about 95 to 99%. So, and demand in Thailand in 2021 is expected to grow because of the increasing government budget on road pavings. So that will help to support the sales and the pricing for bitumen for our company. And this concludes the overall picture of the industry outlook in Q4 and 2021. And then it's the end of the presentation. Then let me move on to the Q&A session. We have a question on does U.S. election impact on oil price? So during the short term, I think it will have a positive impact because the market is quite optimistic about the macro level and also the demand of the global economy. So we could have a softer stance between the US and China. So that will help to support demand side in both the US and also Asian market. But on the supply side, there will be two sides of the picture. So one side is on the U.S. supply, because the new president will be focusing on more renewable and perhaps some restriction on the shale discovery in the U.S. So that will help to limit the new supply of the U.S. shale oil. But on the other side of the supply, it will be the softer stance against Iran and also Venezuela sanction. So we need to watch the situation very closely. So how the market will react in the medium term. And the second question is on when do you expect a significant improvement in GRM? So I'll cover a bit during the market outlooks section. So during Q4, it will still some improvement compared to Q3, but still on a very low side. But coming into 21 is still depending on pretty much the vaccine and also the demand recovery. But with the picture that we show, we think that will be the improvement compared to 2020. So, and the next question is on the investment plan.
And for the investment plan, that the big project that we have now in the CFT, the project that are expected to complete in the Q1 2023, it means we have around 2 more years for the construction. After this project complete, it will generate the money after that. It's expected in Q2 2023 onward. And for the question about sustainability and whether what we have the plan for the sustainability in the long term. For this one now, in terms of sustainability, I would like to tell you that Thai Oil is the 8th year consecutive year that we are in the member of DJSI. The DJSI is an index that for the sustainable company. It's for the global. It's also we have the sixth consecutive year as the leader position in the oil and gas refining and market industry. And for the plan that we emphasize for maintain the sustainability, that we have the vision that we already announced to everyone, that we try to empower human life through sustainable energy and chemical, that we plan to maximize the value chain of the current situation. We try to maximize the refinery after the CRP complete. The production rate, it will increase. It's also we enhance the chain to petrochemical, and also we try to diversify the earning through power and also the new business. And also we have the supply chain management as a platform for everyone. That is a plan for the long term that we will grow for sustainable our income in the future.
There is another question on the oil price outlook for upcoming OPEC meeting. So I already mentioned during the presentation. So we have OPEC meeting on the 30th of November and 1st of December. So they will consider about the cut for 2021, because based on the previous agreement, there will be some relaxing cut by 2 million barrels per day. So with the current market, there's the need to balance between the demand recovery and also on the supply cut. So we expect the oil price to stay in this range, because otherwise, if oil price increase too much, then there will be a threat from the rebounding shales production from the US. And the last question on has there been any changes in acquisition plan post-COVID for Thai oil company? So at this moment, for the investment plan, we focus on CFP. So we try to grow our production based on our organic growth. So if you look at our investment plan for the next 3 to 4 years. The majority of the spending is on the CFP. So we increased our capacity by 40% from 275,000 barrels per day to 400,000 barrels per day in 2023. And we'll change our crude mix from 100% light crude to around 50% light, 50% heavy after the completion. And on the product side, we'll upgrade all the heavy part like the fuel oil and also bitumen to light products such as the naphtha and the middle distillate like jet and diesel. And for naphtha, this will allow us to have the supply for further investment in the future. So that's all for the questions, and thank you for today's session.